In this video, we're going to talk about Senseonics. If you're considering buying Senseonics shares in your portfolio, then please keep watching this video until the end, because it covers many other factors that should be considered regarding buying, holding, or selling the shares. During the most recent trading session, the stock opened at $3.50 and closed at $3.66. The lowest point at which it fell to was $3.36, and the highest point it rose to was $3.78. Compared to the current price action, its 52-week low was 35 cents, and the 52-week high was $5.56. The current trading volume of Senseonics is 41 million shares, compared to the average volume of 29 million shares. This difference between the current and average volume is explained by the recent price spike of Senseonics. Investors are therefore more willing to buy the shares because it increased significantly compared to where it was in recent periods. Keep in mind that a trade volume doesn't tell us where the tendency is going to be, just where it is now. Let's take a look at the difference between the company's market cap and enterprise value. Basically, the market cap is the sum of the price of all shares that are publicly traded, and the enterprise value is the value of the company's assets once all the debts are paid off. We can see that the market cap of the company is $1.6 billion, and the enterprise value is $1.5 billion. The difference between the enterprise value and the market cap is mostly the result of market speculations. Generally speaking, the market cap should be higher than the enterprise value, but not by much. This is the case with Senseonics because there is only $100 million of difference between the two. This means that the market currently reflects a relatively honest stock projection of the company based on its value. Now, let's talk about the number of shares the company currently has and the shareholder composition as of the latest data possible. The total number of shares outstanding is 428 million shares. Amongst the total float, insiders hold 10.6% of them. And we should also look at the percentage of shares owned by institutional investors. In that case, the institutional shareholders hold 16.2% of the total amounts outstanding. There are 76.9 million shares that are being shorted, which represent 18.56% of the shares traded. The percent of the company held by either company officers or the institutional investors are relatively low, and there are about 3/4 of the outstanding shares in the hands of retail traders as we speak. On one hand, it's a positive sign because it shows that the little guys have managed to lift the company. On the other, it means that there may be a lot of speculations and irrationality in the stock movement. The short-term price patterns of Senseonics suggests that the stock is going higher. From a low of $1.9 just a few months ago, the stock is now double compared to that price and has attracted more than 10 million additional transactions on its stock compared to the typical volume. This is encouraging and should trigger our interest. However, if we look at the long-term price patterns, the company seems to have a fairly cyclical price action, and it shows that the company is currently near its historical high, which was also reached back in 2015 and 2018. Of course, this doesn't mean that a company will necessarily tank from here onwards, but more caution is advised. My conclusion regarding the stock at the moment is that there is a momentum upward, and it may very well go beyond the conventional resistance levels. In fact, from here to $4.50, there may be tendencies to sell off the share. If that's the case, then the company will probably fall back to $2 level. If it goes beyond the $4.50 level and maintains there, then the whole situation changes. We can realistically expect that the stock can then skyrocket to higher levels, like between $6 to $10. This is why I would recommend to keep a small position in case the company goes through a high volatility situation, and keeps about 5% of your portfolio ready to buy more if the stock price corrects lower. The last element to consider would be the overall market sentiment in the financial market. The current reality is that investors and money managers are not willing to blindly follow companies to throw in their money anymore, unlike much of 2020. There are many reasons why investors are now shying away from the innovative and disruptive stocks. Some will say that they were overpriced, that they were overbought, or that they were simply relying on selling dreams instead of having solid financials. But the real answer is probably a lot simpler. At one point, people began to unload their shares because they want to lock in their profits. That created a significant crash in the financial market. Not really because those companies are necessarily bad, but that they just had more sellers than buyers. That triggered a torrent of sell-off from February of this year onward. The overall tendency at the moment is that those stocks are now bottoming out, but investors are generally speaking more skeptical, and only the companies that have robust financials or ideas may survive. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.